Officer and President at Mullen Group. Murray, great to talk to you. Thanks very much for joining us.
Andrew, good chatting again.
Just remind us, how much of your business is in Canada and how much is in the US these days, roughly speaking?
Oh, most of it's in Canada still. We have one business unit down in Chicago, our holistic business unit. They do about 5-6% of our total revenues. We do more revenues with some of our others, but we have one business that's based in the US called Holistic. And they're a 3PL business, but most of it, predominantly we're a Canadian company, Andrew. We're across Canada really from Ontario all the way to the West Coast.
So your EBITDA, sorry, Murray, I cut you off there. Your underlying profit, your EBITDA coming in north of 95 million, and it was up 8% year over year. I mean, we've heard a lot of concerns about a freight slowdown, a generally softening economy, but your profit did go up.
Well, look, overall, the economy is soft. It's not dead, but it is soft. And we're up, Andrew, because we did acquisitions, and we've said that that's the case. This is a very difficult operating market and environment, but it's also very good for us as an acquisition-based company. I mean, that's how we grew Mullen Group since 31 years as a public company, is making timely acquisitions in really good companies. And so all of our revenue growth was all because of the acquisition of a large company in Vancouver called Container World. But overall, all the other businesses, it's a grind out there. There's no growth in the economy. You're going to hear from other economists say there's no growth. You've got to cut interest rates. You've got to do this or that. We would concur with that. There's no growth in the underlying economy. But for Mullen Group, we can still do acquisitions. We've got a strong balance sheet, and we've done acquisitions for 30 years, so we know what we're looking for.
So in tougher times, it's easier to get acquisitions at a reasonable price?
That's correct, yes, yeah. So I'm a Warren Buffett disciple, and I save our cash and our bullets till the opportunity's right, and then when the right opportunity comes along, you've got to be positioned to with a strong balance sheet to be able to take advantage of that opportunity. That doesn't mean you're looking for a deal. You're looking for the right opportunity at the right price and that it fits in your organization. But it's a good market for us from that perspective.
Are you seeing any green shoots at all in freight demand?
You know what? That's a really good point. We've seen demand stabilize. Like I said, the economy is not shrinking. So demand is there. It's very competitive today, much more competitive than it was in the last business cycle, because there's lots of supply. The supply chain is reasonably fluid today, and truthfully, I just think the average consumer is just so stretched by the high cost of interest rates and housing and inflation. So they're buying down. So we see some pressure in the market on pricing, but demand is held pretty firm, to be honest with you, from that perspective. All of our issues really are coming in on the pricing side within the transportation logistics industry. And that's a moment in time. It'll eventually normalize, but it's pretty competitive at the moment. There's just not enough demand to gobble up all that supply that's in the system.
What about getting drivers? That has been in recent years a problem for the trucking industry. Are you finding good people to drive the trucks?
Andrew, there is no issue with getting drivers or people. This is kind of the sad part that we see in Canada right now, is that we had one opportunity just in Vancouver. We needed one dock work. We had 600 applicants, so there's no shortage.
What job were you hiring for, Murray?
One job, one opportunity, one job, and there was roughly 600 applicants.
Wow! So
yeah,
people are hurting out there. People are
hurting, Andrew. I've been saying that actually on your channel for quite a while. I said the average person's hurting. The problem that the Bank of Canada has, they always wait for the data to come in. Well, I'm in business. I got to anticipate what's going to happen. They wait for the data to come in. By that time, it's too late. The average person has been really hurt by this. They were approaching yesterday's inflation target that they created. And, it really hurt the average person. Inflation is a terrible tax on the average person.
Yeah, it is interesting. And some corporate leaders saying we just can't increase prices anymore, that the consumer just won't put up with it.
They won't put up with it. They can't. They've been pressured. So that could take a while for us to get out of that situation. In my opinion, I'm not the professional economist, but I'm a business person that says, just practical standpoint, I think that it'll be difficult. So we're running our business, and within that it's going to be competitive. We've got to watch our costs, and then we'll be very thoughtful of how we do acquisitions so that we can we can still drive good earnings and good returns for our investors.
Okay, can you remind me, are you buying back stock these days?
Not as much because there's so much opportunity right now, I think, for consolidation of our industry and really good opportunities. So I think kind of our bias would be more growth right now than shrinking the share base, to be honest with you.
We'd better jump. Always great hearing from you, Murray. Really appreciate it.
Thanks, Andrew. Great chatting.
That is Murray Mullen of Mullen